The Trade is brought to you by Vantage Markets, delivering one of Australia's most trusted and award-winning trading experiences. Explore smart trading at vantagemarkets.com.au.
Hello and welcome to The Trade on this Monday. Well, let's first take a look at what traders are watching out there. Global oil futures slipping about 1% at the beginning of trade on Monday after Iraq's Kurdistan region resumed crude oil exports via Turkey over the weekend. China's industrial profits returned to growth in August, even as businesses brace for a broader economic slowdown amid persistent demand woes. US President Donald Trump hoping to finalise a Gaza peace plan proposal in a meeting later tonight with Israel's Prime Minister. The Ukrainian officials will visit the United States this month or next for talks on major arms purchases and drone production deals, according to the Ukrainian president. And gains on Wall Street were not enough on Friday to erase a loss for the week. Well, let's now get across the charts. We are joined by Michael Gable from Fairmont Equities. Michael, welcome to Monday. Good to have you on the show.
Thank you.
Let's start with equities, in particular what we're seeing on Wall Street at the moment, those records continuing. We were just talking about, it's pretty hard to stand in the way of that momentum at the moment. So what are you seeing?
Yeah, exactly, and the chart reflects that. It's just a very nice, smooth uptrend in the US market. No clear warning signs. A bit of a Goldilocks situation at the moment. We've got, rates coming down in the US. Growth is holding up. Employment numbers are looking fine, etc., etc. So, yeah, all of that's reflected in the way it's trading. So this is the daily chart of the S&P 500. Very nice smooth uptrend. For those that are looking for any possible signals of weakness, what I've got on this chart is the 50-day moving average. That's the darker blue line, and below that's the 200-day. So the 200-day moving average is more of a longer term sort of signal. If it trades under that, you may end up with a decent period of weakness. But shorter term, if you look at the 50, we could see that since the market rebounded a few months ago, it's been trading nicely above that 50-day moving average. That's the blue line. So, my advice would be, as long as it stays above that blue line, we take a positive stance on the S&P 500. With our clients, we've got, we are holding the Nasdaq ETF. So the Nasdaq looks pretty much the same as this, and I'm just using that 50-day as my trailing stop. So as long as the Nasdaq's above its 50-day, I'm in the trade. If it closes under the 50-day, I'll get out and wait for other opportunities.
All right, that's what we're seeing at an equity level. Now, Michael, of course, when we take a look at, gold, there we go, it just flashed up there.
Yeah.
Look, this has been an amazing run, hasn't it, over this past, since the beginning of the year. What are you looking at? Is history any guide here as to where it's likely to go?
I think so, and I hope so, because if history's any guide, we've got a lot of upside still to come. So this is a similar chart to one that I brought in earlier in the year when I was talking about, gold could potentially end the year with a 4 in front of it, and we're getting close to that, and there's still a couple of months left in the year. So the point of this chart, this goes back about 50 years, is showing, the moves that we've previously seen in gold bull market. So we could see that in the 70s there, and I've converted this to a log scale to make it a little bit more relevant. So we could see the huge move on the far left hand side in the 70s, where gold went from about 30 something US dollars an ounce to nearly $900 US an ounce. Took a number of years. But then gold does have these large consolidation periods as well, and that's what I've circled there. So we could see that for much of the 80s, early 90s, it did consolidate. And then we had the last bull run in the early 2000s, and that's where it went from the 200s to over 1,000. And then the second circle is basically the last consolidation that we saw in gold. So if you now draw your eyes to the far right hand side of this chart up at the top, that's where we are now. So it feels like we've come a long way, but I think we're really only just starting. So
Just starting.
Just starting. So
All right.
any dip is still an opportunity.
So what's the best way of playing this? Is it with a direct exposure to the gold price or perhaps stocks?
So stocks will give you that more leveraged outcome. Of course, that works both ways. So when gold eventually comes back, you'll lose more being in a gold stock than being in gold itself. But given that we're still in the uptrend phase, you're better off in a gold stock. Now, which stock do you pick? Sometimes that can be hard with the miners. As we know, they have production problems, various issues can come out of left field. So the way I'm playing it for clients is we've got an ETF which captures over 60 gold miners, global gold miners. So that way, if there's an issue with one of these gold miners, it doesn't affect the overall performance of the vehicle. So GDX is one example. It's a VanEck Gold Miners ETF. This is the one that we're invested in. I still believe this is a buy on any dip. And what this chart is showing is its performance compared to gold since around March last year. So I take March last year as the start of the latest breakout in gold. So we could see that the red line at the top is GDX and the blue line is gold. So gold's had a great run so far. It's up nearly 80% since that breakout, but the GDX ETF is up about 150%. So, and that makes sense. You tend to get, stocks tend to do about double, mining stocks when the underlying moves a certain amount, all else being equal, you often see that the mining stocks tend to move twice as much. Of course, the other way as well, if gold falls. But for viewers, have a look at the GDX if you're not sure which gold miner to pick up.
All right, outside of gold, but sticking with mining stocks there, mineral resources, you're taking a close look at this, of course, has been under tremendous pressure given the multitude of issues that it's had to deal with. Are you seeing upside here?
Yeah, it's trading really well. So, I get asked about lithium a lot. It's not my preferred commodity. I do like gold, silver, uranium, but it does look as though mineral resources has bottomed out on the chart. It's one of those situations, I think, where, there were plenty of reasons to hate it. Everybody hated it, and that it was probably oversold. So it's cut through some major resistance lines. I think it's bottomed. Most recently, there was a major resistance line in the high 30s. And what I've circled on the far right hand side is quite interesting, because as it got up to that resistance line, it spent about a month consolidating under it, and that usually gives it the fuel to push through and make another run. So it's breaking out yet again. This is something that I've been happy to pick up last week, and I think Min's going to have a run up to the next level at 55. So I think there's a good trade there.
And just finally, out of the resources sector, let's take a look at one of the bigger financials in terms of Macquarie Group. You're saying, this is pretty much lagged what we've seen elsewhere in the financials. So what are you watching for?
Yeah, so since the start of the year, it's lagged financials. It's lagged the ASX 200. But I find the price action to look very interesting here. So we've got a situation where after it rallied hard off that April low, it did fall short of its recent peak, which is near $240. But I've noticed since late June that the price range has been tightening up, and that's what I'm indicating there with the blue line. So usually that precedes a decent move. I think it'll most likely break to the upside. At the moment, Macquarie is at the lower end of that trading range. So I think there's an opportunity today to pick up Macquarie, but I think the next big buy signal would be if it could push above $230, then I think it'll start playing catch up. So definitely one to keep on the watch list.
Michael, terrific stuff. Great to get across those charts. Thanks so much for joining us on Fairmont Equities. And that is the trade for this Monday.
The trade was brought to you by Vantage Markets, delivering one of Australia's most trusted and award-winning trading experiences. Explore smart trading at vantagemarkets.com.au.